Welcome to the Explainer. Okay, today we are breaking down a really massive barrier. For a lot of people, the stock market feels like this highly exclusive club with a velvet rope that completely keeps them out. But today, we're cutting that rope. We're going to dive right into the data to show you exactly how accessible building wealth has actually become for everyday people.
So let's jump right in. What if I told you that you absolutely do not need thousands of dollars to start investing? I know it's a super widespread myth that investing is this elite game meant only for the ultra rich. But the reality? That simply isn't true anymore. Not even close.
In fact, you can begin building a lifetime habit of wealth with just $100. Thanks to modern investing apps, literally anyone can start small today. So, in this explainer, we'll uncover exactly how to deploy that very first $100, how to sidestep those common traps that beginners always fall into, and how to set yourself up for lasting long-term success. Here is our roadmap for today. We're going to tackle the more money myth, establish your financial foundation, open up the modern investing toolkit, walk through a simple 5-step plan, and finish up by mastering the marathon mindset.
Part 1. The more money myth.
So the absolute biggest mistake people make right out of the gate is simply waiting. We've all done it, right? People tell themselves, well, I'll start when I have $1,000, or I'll definitely start when I hit 5,000. But what actually happens? Life happens. The goalpost keeps moving, years pass by, and they never actually begin. And when we visualize this data, the disparity is honestly striking. Look at the strategy of waiting 5 years to painfully scrape together a lump sum versus just starting today with $100. Time in the market is vastly more powerful than the actual dollar amount you start with. Getting that first $100 in there builds the most crucial asset of all, which is the habit of consistency.
Number 2. Your financial foundation.
Now, before that $100 ever hits the market, your cash flow needs some strict prioritization. If you break your finances down into a chart, you've got to handle 2 slices of the pie first. First, eliminate high-interest debt, like those credit card balances charging 20% or more. Second, secure your emergency savings so you aren't completely derailed by life's little surprises. It's really only when those 2 critical bases are covered that you finally unlock your investable cash. Which brings us to the golden rule. Only invest money you won't need immediately. Investing is an incredibly powerful engine, but it's designed strictly for long-term goals. It is absolutely not for next month's rent, and it's definitely not for next week's vacation fund. Keep those separate. Part 3. The Modern Investing Toolkit. Okay, if you're a beginner, you really need to stop stressing about picking the next Apple or Nvidia. It's a trap. The smart play is using a low-cost index fund or an ETF. If you aren't familiar, an index fund basically owns hundreds of different companies inside a single investment. That gives you instant diversification right out of the box, without needing to be a Wall Street expert. Think about it visually. Because an index fund holds all these hundreds of companies together, your risk is instantly spread out across all of them. If one single company in the fund takes a sudden hit, the other companies are there to step up and help balance out your overall investment. You aren't relying on a single point of failure anymore, which, let's be honest, lets you sleep a whole lot better at night. And alongside those index funds, modern platforms now offer fractional shares. This is a massive shift. Consider the contrast here. The old way meant if a stock cost $500, you had to fork over all 500 just to get your foot in the door. But the new way? You can buy just $20, $50, or $100 worth of that exact same stock. Fractional shares are literally the great equalizer for everyday investors. Number 4. The simple 5-step plan. Actually executing this is incredibly straightforward. Step 1, open an account with a reputable brokerage. Step 2, deposit your initial $100. Step 3, choose a diversified index ETF or mutual fund. Step 4, actually click the button to buy the investment. And step 5, this is the real secret to wealth, guys. Automate it. Set up an automatic transfer of even $25 to $50 a month going forward. Consistency beats market timing every single time.
Part 5. Mastering the marathon mindset.
As you start out, you really have to protect yourself from common emotional traps. First off, please don't chase hot stocks just because they're trending on social media. Second, do not panic sell when the market drops. Volatility is completely normal, it's just part of the ride. And third, stop checking your portfolio every single hour. Investing is a marathon, not a sprint.
Patience is your ultimate advantage here. Think of your first $100 in month one as simply planting a seed. Sure, it looks tiny at first, but through consistent watering in year one and the sheer magic of compound growth by year 10 and beyond, that little seed grows into a massive tree. Your first $100 won't make you a millionaire overnight, but it is the absolutely critical catalyst for a lifetime of smart investing.
The most important step isn't having some massive amount of money saved up. It's simply getting started. So, what will your first $100 be invested in? The velvet rope is officially gone, the tools are right there in your hands, and your wealth building journey can start right now. Thanks so much for joining me on The Explainer.